Welcome to Breaking News and Trading Moves. Today we're looking at a pretty sharp rally that popped up recently, centered around quantum computing stocks. Seems like it's kicked off by some fresh media coverage and analyst chatter. So the goal for you today is really to understand where the capital went, who benefited right away, and just as important, who saw money move away.
Yeah, exactly. This kind of event, it's often called a theme ignition day in the market. It really shows how specific news flow can, rapidly point capital towards an entire tech sector. And the main headline we're talking about here is quantum stocks, specifically Rigetti and D-Wave. They saw these gains after that media coverage and analyst talk, and that sort of sparked a wider sector rally.
Okay, so that mechanism, that jump from the, let's call them pure plays, to the wider sector, how does that actually work? When the main names move, how does that translate to, say, adjacent companies? And what makes money leave the older tech?
Well, it's a pretty standard rotation, really. It's driven by what people perceive as opportunity versus risk. So when those quantum pure plays get really active, lots of volume, speculative money tends to chase that story. That capital then flows outwards towards the enablers, specialized suppliers, the cloud platforms that give you access, the tooling companies. On the flip side, if you're holding stock in, say, established classical high-performance computing, HPC, or maybe legacy data center stuff, the perceived future threat from quantum, even if it's years off, that makes those older holdings look a bit vulnerable. So you see capital rotate out. Investors are always kind of trying to position themselves ahead of disruptive changes. So let's start with the first group of winners. The primary beneficiaries, the ones leading the charge. These were the names directly caught up in that coverage, so they were immediate targets. They got a boost from renewed attention, some confirmed sales recently, and positive analyst takes. First, Rigetti Computing, that's ticker RGTI. It saw immediate gains.
And the specific reason here wasn't just general buzz, it was confirmation of recent hardware orders. Yeah. That gave analysts something solid to point to.
Right, a tangible reason. And D-Wave Quantum, ticker QBTS. What was the story there?
QBTS. It's a really key part of this spike, mainly because of its market structure and its liquidity. D-Wave tends to pop on positive headlines quite often, and it trades with pretty good volume usually. That makes it a bit of a go-to name for maybe more institutional players who want that high beta exposure when the quantum theme heats up. Basically, capital goes where it can trade easily and, quickly jump on the momentum.
Okay, so that brings us to the infrastructure piece, the platforms you need for companies to actually get access.
Yeah.
You mentioned money flowing to enablers. How integrated is that right now? Is it just like a temporary toll booth to get to the hardware, or is this something more structural, longer-term tailwind for giants like Microsoft and Amazon?
That's a great question. That's a key distinction, really. For now, yeah, it kind of functions like a necessary toll booth. But it definitely has strong long-term implications. Look, if developers or big companies want to start playing around, prototyping, running experimental quantum jobs today, they're not going out and buying a multi-million-dollar quantum machine. Not typically. They're using public cloud services to spin up those workloads. So Microsoft, ticker MSFT, it benefits through its Azure Quantum Service. And Azure isn't just hosting the hardware. It's providing all the orchestration, the tooling, access to multiple quantum backends. They're really building up the expertise and the developer community around that crucial middle layer, the part connecting users to the complex hardware underneath.
And Amazon, ticker AMZ, is doing something similar with its offering.
Exactly. Amazon Bracket lets users run and test quantum circuits, again, across various hardware providers. So what this means is basically every bit of increased enterprise curiosity or R&D spending on quantum directly boosts usage for Azure and Bracket. It's a pretty powerful medium-term driver fueled by all this experimentation, even before we have widespread practical quantum applications. These platforms, they capture revenue almost regardless of which specific quantum hardware company ultimately wins the tech race. Okay, so moving beyond that core infrastructure, we also saw what people often call sympathy flow. It's pretty common. When a big theme ignites like this, the immediate peers, especially names people recognize, they often get lifted just by the general sector momentum and, frankly, retail attention. This is where we saw IonQ, ticker IONQ. It usually trades pretty closely with the whole quantum basket anyway, so it saw a boost. It's the kind of stock traders might look at for proxy exposure if they feel like they missed the first jump in, say, RGTI or QBTS.
Makes sense. And Quantum Computing Inc., ticker QUBT, that one also got swept up in the excitement.
Precisely. QUBT was getting some fresh looks right alongside that broader sector buzz. When the news focuses on quantum, Money tends to flow pretty broadly into the liquid names tied to that theme, even if the specific news didn't mention them directly. It's just generalized thematic buying.
All right, so we've covered where the money seemed to rush in. Now let's flip it. Let's analyze the other side of the coin, the capital that got pulled out, maybe to fund these new moves. The first area you highlighted facing rotation risk was classical high-performance computing and server vendors. Why do incumbents like Dell and HPE feel the heat right away?
Well, this rotation, it really reflects how the market tries to price in the future. Investors might be moving capital out of those names partly because of a long-term worry about potential disruption from quantum tech down the road. The fear isn't really that quantum is going to replace every server tomorrow, not at all. It's more that corporate IT spending, their capital expenditure budgets, might eventually need to be reallocated towards supporting quantum infrastructure or maybe highly specialized hybrid systems.
So the market's essentially pricing in either like a future decline in relevance for the old guard or maybe the high costs they'll face adapting their classic infrastructure to work with a quantum future.
Yes, exactly. Companies like Dell Technologies, ticker DELL, and Hewlett-Packard Enterprise, ticker HPE, their business relies heavily on the current data center models and sales cycles. So any perceived long-term threat to that model, or even just a hint of a massive, costly infrastructure change needed later on, that can cause capital to look for safety in what are seen as more future-proof areas. The money moves from the established tech towards the aspirational tech. And this idea of future costs, it leads us right into the second area that felt some pressure. Certain cybersecurity firms, they're facing what some analysts are calling a transition overhang.
Okay, transition overhang. That sounds a bit technical. Can you break that down? What does that really mean for a company like, say, Fortinet or Palo Alto Networks?
Yeah, it relates directly to something called post-quantum cryptography, or PQC. Basically, the move to PQC is seen as absolutely necessary because quantum computers, if they reach a sufficient scale, pose a theoretical threat to a lot of our current encryption methods. Think RSA, ECC, the stuff securing much of the internet now. And because bodies like NIST, the U.S. National Institute of Standards and Technology, are actively working on standardizing these new PQC algorithms, well, the timeline for needing to implement them has effectively already started.
Ah, so you're saying these companies can't just wait until powerful quantum computers actually exist. They have to start spending on R&D and new product development right now.
Exactly right. Implementing these new PQC algorithms isn't trivial. It likely requires a whole product refresh cycle across their entire lineup, firewalls, VPNs, you name it. It's a huge re-engineering task. So for companies like Fortinet, ticker FTNT, and Palo Alto Networks, ticker PANW, this implies, well, pretty substantial future spending that's basically mandated by this upcoming tech transition. It's spending on research, getting aligned with standards, deployment, and that future cost, that unavoidable expense looming on the horizon, combined with maybe some uncertainty it creates about their product roadmaps in the near term, that can put downward pressure on their valuations today.
Okay, this next part is where it gets a bit tricky, almost counterintuitive. We're talking about overextended runners prone to mean reversion. And wait, the names popping up here are IonQ and Quantum Computing Inc., the same ones we just listed as winners. How can a stock be both a winner and a loser in the same, period?
Right. And that tension, that's actually where you find a key trading angle, and it perfectly illustrates the volatility in these high beta sectors. These tickers, IONQ and QUBT, they're high beta. They're very sensitive to momentum. So yes, they benefited hugely when the quantum theme ignited, like we discussed with the sympathy flow. They were probably among the fastest gainers initially. But, this is the key, precisely because they might have had big run-ups, maybe over several weeks leading into this specific news day, they become prime targets for profit-taking.
So the downward move isn't necessarily about some sudden problem with the company itself. It's more about technical factors, like traders managing their positions.
Exactly. Think about a trader who bought IonQ, or Quantum Computing Inc., QUBT, maybe a couple of weeks earlier. For them, this sector-wide spike, this surge in volume and attention, it's the perfect technical signal to exit. They can harvest those quick gains, lock in the profit. So the stock might have benefited from the general excitement early in the day. High volume looks great. But then as bigger players or early buyers see that chance to cash out, that selling pressure comes in, and it can cause a pretty rapid pullback, a mean reversion later in the trading day or the next day. The volatility in these names cuts both ways very fast, often makes them top gainers one moment and, well, fast fallers the next. So just looking at the immediate data points from that day, the fact that, multiple outlets confirmed the initial spike in Rigetti, RGTI, and D-Wave QBTS, that adds a bit of confirmation. That kind of momentum, if the trading volume stays strong, can sometimes sustain itself for a bit. Also, keep an eye on that platform tailwind we talked about. The usage of Azure, Quantum, and Amazon Bracket, it's likely only going to grow as more companies dip their toes into quantum R&D. That seems like a solid medium-term positive for Microsoft, MSFT, and Amazon AMZN.
Right. So the caution here, then, is that while these theme ignition days can create opportunities, the very nature of this high beta tech means things can reverse just as quickly as they started.
Absolutely. That volatility means position sizing, risk management, it's all crucial, especially if you're trading based on this kind of news-driven momentum rather than, say, confirmed quarterly results. And maybe for a final thought, something to chew on, I'd suggest looking beyond just the tickers that rallied hard that day. Think about that concept of transition risk, particularly for those cybersecurity names we discussed. Even if practical, large-scale quantum computing is still years away, the sheer necessity of shifting to these new PQC algorithms means the planning, the resource allocation, the budgeting for those potentially huge product refresh costs, that's starting now. Consider the scale of that. What does a global mandatory encryption upgrade eventually mean for companies in totally different sectors? Think banking, healthcare, government systems, all relying on current encryption standards. That's the broader, longer-term cost implication to keep an eye on.
That definitely puts the day's market moves into a much broader context. Thanks for walking us through all that, and thanks to you for engaging with this material today. We do want to remind you that this discussion is not financial advice. It's not a recommendation to buy or sell any security mentioned here. This information is purely the opinion of the author of the original material we covered.